Good morning, everybody. I'm just going to wait, give another couple of minutes for people join in, and then we will get started.
Want me to admit these people?
Okay, good morning, everybody. I think we're going to get started. So good morning, I'm Marianne de Bond, and welcome to our webinar on eligibility of expenditure and controller framework. Apologies to anybody who was having issues with the link. I'm not quite sure what happened there. But if you have any colleagues who haven't been able to join via the link, if they could email me with their email addresses and I can try and add them on. We've had a few technical glitches this morning, as always. We're expecting around 150 people today, so it's great to see such excellent engagement, and I hope that the session will answer all of the questions that you have. Just to let you know, the session will be recorded. We're recording now, and it will be uploaded to our support portal. So if you have any colleagues who weren't able to make the session, they will still be able to watch it afterwards, and you will have it there for reference as well. For any projects who came to this training last year. This is obviously an updated session, so I will be taking down the recording from last year and replacing it with this one. So this one will be your guide going forward. So today's session will be presented by Emma Fallis, who is our eligibility manager, and she will be covering topics such as cost categories, procurement, partner reporting, audit, and controller framework. We will be running a Q&A as well as the presentation, and we will answer those questions after the presentation has finished. If you would like to submit a question, there's the Q&A button just at the top of your screen where you can submit your questions. Please don't try to use the meeting chat because we have disabled it, so all questions will need to come through the Q&A. If you do ask a question today that we're not able to answer, we will take a note of it and we will come back to you, but hopefully we won't need to do that. But if so, we will come back to you as soon as possible with the answer. So if we're all ready to go, I will now hand over to my colleague Emma, and I'll see you once we come back for the Q&A.
Good morning, everybody. So the session today, we're actually going to start by looking at the PEACEPLUS program manual, and it's available on our support portal. So it offers guidance and instructions on all stages of the project lifecycle. It's one of the key documents that you would refer to in your letter of offer, and it's in addition to the standard conditions of grant. Version 10 of the program manual was published there in April. And there will be updates made of the programme manual over the course of the programme period. And these will be made available on the support portal, and lead partner contact will be notified via email when the new version has been published. The programme manual is divided into 8 chapters. And today we're going to focus on Chapter 5, which is the project implementation, and that includes partner reporting. Chapter 6, which relates to financial rules and eligibility of costs. And then also the annexes included in the programme manual, which includes fact sheets on each of the cost categories, fact sheets on simplified cost options applicable to the different investment areas, and also take a look at Annex 2, which is the procurement thresholds. The programme manual should be something that you keep to hand and is referred to during the implementation of your project. So eligibility of expenditure, and there's a number of general principles. So this is covered in section 6.1 of the programme manual. Eligibility of expenditure is based on the type of costs, and there are 6 different cost categories which we'll review later. Forms of contributions, and these then are the methods by which you claim the costs from the programme, and this is either simplified cost options or real costs evidenced by audit trails. The eligibility period that each project has, an eligibility period, and it's their lifespan, and it's stated in their your letter of offer. All costs incurred either before the start date specified or after the end date will not be considered eligible for your project. Another area that needs to be taken into consideration is the type of activities and their connection to the project. The programme manual describes the types of costs that are eligible under each of the cost categories. But not every project will have the same types of eligible expenditure. Project partners need to ensure there's a connection between the expenditure that they incur and the approved project. Otherwise, expenditure will be deemed ineligible. There are also 3 general principles that in relation to costs that you must comply with. Costs must be incurred by the partner who holds the budget within the project's eligibility period. Sound financial management should be respected, and cost efficiency. That's in relation to the implementation of your project. The most costs must be incurred in the most efficient manner, and also ensure that value for money is being achieved. And also no double funding. As a programme, we want projects to be reimbursed for all the costs that they incur, but there are rules that need to be adhered to. Section 6.1.1 of the programme manual outlines the hierarchy of rules, which are applicable to the projects supported by the PEACEPLUS programme. There are 3 different levels of eligibility which form the basis of the guidance contained in the PEACEPLUS programme manual. Partners must first comply with the EU regulations, which when incurring expenditure. When the EU regulations do not stipulate provisions, the PEACEPLUS specific programme rules apply, and these relate to the areas of support provided by the Commission. Then national rules have to be taken into consideration, and finally the partners' internal rules should be followed. The rules form a paired structure, and the PEACEPLUS programme, the most stringent rules always apply. There are a number of general principles that all items of expenditure must comply with. So as I said previously, they need to comply with the EU, programme and national rules. And as previously stated as well, it's the most stringent rules apply. Expenditure must be clearly linked to the project and essential for the delivery of your project activities. And these are outlined in your application form or within the scope of the investment area that your project has been approved within. And you also then can refer back to the call document that you would have referred to when you were applying for your funding. You need to comply with the approved costs within the cost categories. As previously stated, these are the fact sheets for each of the cost categories, and they are contained within Annex 1 of the programme manual. Each of these fact sheets are based on different articles within the EU regulations, and they outline the types of costs which are eligible under the cost categories. Partners need to ensure that expenditure is identifiable, verifiable and documented. There needs to be an appropriate audit trail to support each item being claimed on a real cost basis. And if appropriate, if an appropriate audit trail does not exist, unfortunately the item of expenditure will not be reimbursed by the programme. Projects must have incurred all expenditure within their project eligibility period stated in your letter of offer. And one thing to note is that the eligibility period for each project will have to be incurred. You need to ensure that the independent controller costs also associated with the control work are incurred in this eligibility period. So the final claim that needs to be submitted needs to be controlled by your controller before their end date to enable reimbursement to happen for those costs to also be considered eligible. Costs need to be identifiable in your accounts, and that's each project needs to have evidence of the cost being incurred, either that through a separate bank account or identifiable using an accounting or a cost centre code. Unless the costs have been incurred by the partner who holds the budget, they will not be reimbursed by the programme. Complying with all relevant rules on public procurement, double funding isn't allowed, and projects need to ensure any expenditure that they are claiming from the programme hasn't been reimbursed by another source of funding or already covered by one of the simplified cost options approved by your project. There is greater opportunity for this to occur during this programme period due to the increased use of simplified cost options. And this is an area that also attracts particular attention from the auditors. Types of costs that form part of the contributions. This is covered in then section 6.1.2 of the programme manual. There are two types of costs. Real costs or actual expenditure incurred by the partner. All costs incurred must relate to invoices, payments made to your organisation or supplier who are external to your project. A key point to remember is that projects cannot engage or contract another partner to deliver or provide goods or services to a project at a cost. A partner cannot charge for the use of their own meeting space or facilities to the project, either for themselves or for another partner. That's just an example of the type of thing that wouldn't be permissible. If the budget holding partner cannot implement a certain activity within the with the agreement of JS, the activity may be reallocated to another partner so that they can reclaim the true and real cost of implementing that activity. Another area that we're aware of is that some projects may have entered into service level agreements with another partner or other departments within their organisation. The recharge invoice is not considered to be a real cost. The real cost is the actual invoices which have been received and paid by the partner. And if you've entered into a service level agreement, you need to ensure you present the actual costs which relate to the service level agreement, as in most cases, the service level agreement hasn't been entered into as a result of a public procurement process. There are 4 different cost categories that a partner will claim their real costs against, and these are staff costs, external expertise and services, equipment, and infrastructure and works. although in some investment areas do not use all these cost categories. Within this programme period, the Commission have introduced more simplified cost options, and some were used in the previous programme period, but there is greater emphasis from the Commission for their use in this period. All projects will have some simplified cost options approved within their letter of offer, and these take the form of flat rates, unit costs, or lump sums. A key point to remember is when expenditure is covered by a simplified cost option, it cannot be included in any other cost category as a real cost, as this would be regarded as double funding. The next cost category we're going to talk about is in staff costs, and this is included within Fact Sheet 1, and this then is based on the relevant article within the EU regulations. So direct staff employed by your project, there are two conditions which must be satisfied. We need to ensure that there's a legal link between the project partner and the member staff, and that is, for example, a contract of employment, and there needs to be transfer of monies. So unless a person working in the project has documentation to satisfy both conditions, their costs cannot be claimed under the staff cost category. And if other costs that don't satisfy those conditions are claimed, they will be rejected from the claim. If a project uses agency staff, their costs are not eligible under staff costs, as they don't satisfy the two conditions. The legal link for these staff isn't actually between the partner and the member staff, it is between the recruitment agency and the member staff. The same applies to the transfer of monies. This is a change to the approach adopted in the previous programming period, but this is based on guidance received from the Commission. So I'm going to go through now some key points in relation to staff costs. The staff who are working in the project should have been appointed via an open and transparent recruitment process, and that needs to be in compliance with statutory requirements and also the partner's recruitment and selection policy. The salary payments processed through the employees' employing partner's payroll system, and salary paid should be based on pay scales of the employing partner or the place of their employment, not the jurisdiction in which the employee lives. Agency staff are not eligible under the staff cost category. And compliance with national rules regarding cross-border workers and the payment of taxes in the correct jurisdiction must be ensured. I'm going to talk now through the audit trail that you should be providing to support staff costs. So it is the contract of employment signed by the employee and the employer. There should also be a task assignment letter, and this is a new introduction in this programming period. And this confirms the fixed percentage of time per month and a description of the duties. So if a member of staff is working 100% of their contracted hours on the project, they still need a task assignment letter, but the input percentage would be 100%. If somebody is working 20% of their time on the project, the task assignment letter would confirm they're working 20% on the PEACEPLUS project, and it would confirm then 80% then is being worked on other activities. So the task assignment letter needs to reflect 100% of the employee's working hours. And a template of the task assignment letter is included in Annex 5 of the programme manual. You also need to provide payroll documentation or pay slips showing all costs. And pay slips can be accepted if they do include all the costs. But in some instances, pay slips don't include employers' costs, so therefore you need to ensure you provide other payroll documentation to evidence these costs. And then the final piece of information that you need to provide is proof of payment, and that is bank statements supported by BACS reports if applicable. Next cost category is the office and admin, and all projects will have this cost category to cover their indirect costs. Fact Sheet 2 in the programme manual provides information on this. All projects with the exception of Investment Area 3.2 will have a flat rate based on 15% of their direct staff costs. The flat rate covers general administrative expenses and indirect costs of the partner that are necessary for the delivery of the project. And examples of this are like office rent, insurance and taxes related to the building where staff are located, utilities such as electricity and heating, office supplies, which is stationery, pens and paper, accountancy services, archiving, maintenance, cleaning and repairs, and security. IT systems, including software for administrative purposes, communications, if it's used for communication purposes, for example, telephones and mobiles, bank charges associated with the opening, administrating of a separate bank account, and also charges for transnational financial transactions. Investment Area 3.2 has a flat rate based on 40% of their direct staff costs to cover all other costs. Projects under this investment area only have two cost categories, which is the staff costs and the flat rate of 40%, because it covers all other associated costs in relation to the implementation of their project. In relation to the audit trail, partners are not required to justify or provide any supporting documentation during verification in connection with the office and admin flat rate. The next cost category is the office and the travel and accommodation. And within the PEACEPLUS programme, this is being paid as a flat rate. This is a new simplification that the Commission have introduced, and details of this are included within Fact Sheet 3. Travel and accommodation costs cover the travel costs, accommodation costs, cost of meals, visa costs, daily allowances of staff of the partner organisation that relate to the project's delivery. Projects with the exception of Investment Area 3.2 and 4.3 will receive a flat rate based on 7% of their direct staff costs. And those in Investment Area 4.3 will receive a flat rate based on 4.5% of their direct staff costs. Travel and accommodation costs or of external experts or service providers, for example, speakers or such like, must not be included in this cost category. These costs fall under the external expertise and services cost category. Expenditure covered by any simplified cost option cannot be included in any other cost category. The next cost category is external expertise and services, and this is detailed in Fact Sheet 4 of the programme manual. This cost category relates to the external experts and services provided by a body or natural person who are outside the partner organisation. Types of external expertise and services that your project can incur must be directly linked to the activities that have been approved as part of your project, but it can include things like studies, surveys, training, translation, development, modifications or updates to project-related IT systems or websites, promotional or communication or publicity information in relation to the activities linked to your project or the programme, registration fees, legal consultancy, intellectual property rights, costs of management verifications, and that's your external controllers, and travel and accommodation of external experts, volunteers and speakers, or other specific expertise services required by your project. If the project does not have an external expertise and service budget or a limited budget, you need to make sure you live within the budget for those cost categories. So you just need to be mindful that if you don't have a budget or you don't have some of these cost categories, you cannot claim those costs. So the audit trail then to support external expertise and services is an invoice, evidence of procurement for all goods and services over £200 or €200, a contract or written agreement, which is the link between the service provider and the project, and proof of payment, which is the bank statement supported by a BACS report, if applicable, and evidence of the work that has been delivered. The next cost category is equipment, and this is covered in Fact Sheet 5 of the programme manual. This cost category relates to the cost of purchasing, renting, and leasing equipment by the project partner. Equipment which is purchased, rented, or leased is eligible if it is used solely for the purposes of the project and the cost was incurred and paid within the project's eligibility period. The full purchase cost of the equipment can be claimed as long as the depreciation plan isn't longer than the project duration. The PEACEPLUS programme regard an asset as a tangible item with a useful economic life more than 1 year, and the cost which is greater than €1,000 net of VAT or £1,000 net of VAT. Projects need to consider carefully what equipment they need to purchase and ensure it has a direct link to the implementation of the project. We also then in relation then to the audit trail then for the equipment costs, it relates to the invoice, the evidence of the procurement, If applicable, the depreciation calculation, the proof of payment, which is the bank statement supported by the BACS report if applicable, and the proof that the piece of equipment exists, and if applicable, recorded on an asset register. Next cost category is infrastructure works, and this is included within fact sheet 6. And this relates to the purchase of land, building permits, building materials, labour, and specialist interventions. And the audit trail that's required then to support infrastructure and works is then the invoice, the evidence of procurement that needs to be in line with the procurement thresholds, which are included in Annex 2, which we will look in a later slide. There needs to be a contract, and any changes must comply with the public procurement rules and have been appropriately documented. A technical specification needs to be provided as well. Evidence of infrastructure and works and the consents and protocols and certificates, if they have those need to be provided. And where stage payments are being made, evidence of delivery of the milestones need to be provided along with the each stage payment that was being claimed. In relation then, proof of payment is required, and that again is bank statements supported by BACS reports if applicable. Some investment areas have approved lump sums or unit costs where the costs do not feature in any other cost category. And the investment areas that these relate to, so investment area 1.1, there is a project preparation lump sum, and fact sheet 8 it gives you further information in relation to that. Investment area 2.2 is Innovation Challenge Fund, and fact sheet 9 in the programme manual covers the information for that. There's a number of simplified cost options applicable to that investment area. And investment area 3.1 formal, there's a unit cost per child completing the Shared Education Together programme. And again, fact sheet 10 provides information on that. And again, to reiterate, expenditure covered by a simplified cost option cannot be included in any other cost category. And if it is either claimed in another cost category as a real cost basis, it'll be deemed as double funding and it'll be rejected from the claim. So ineligible expenditure, in addition to eligible costs, there is also some costs which are defined ineligible by the EU regulations. And these are details have been taken from section 6.3 of the programme manual. So the first thing is, we've already said, costs must be declared under the correct cost category. If you report an item of expenditure under the incorrect cost category, it'll be rejected. Costs must not be declared more than once, and we've already mentioned that. So that is both either on claims cost relating to a simplified cost option, also claiming on a real cost, or even where you have an item of expenditure claimed on a real cost and it's been claimed more than once. Costs covered by a flat rate cannot be reported separately. Additional or alternative sources of funding. So if a piece of expenditure has been already funded by another source of funding, it cannot be also claimed from the PEACEPLUS programme. Interest on debt is ineligible. The purchase of land, the regulations have stated that amounts exceeding 10% of the total eligible project costs are regarded as being ineligible. But there is a limit. So if you're having a capital project and it includes land purchase, and the land purchase is less than 10% of the total project cost, those can be considered eligible. VAT, which can be recovered from the revenue for projects with a total project cost of greater than 5 million, including VAT, or greater, is ineligible. On the other side of that, if your project is less than 5 million euros, you are able to claim the VAT, even though if you can reclaim it from the revenue or not. This is a simplification that the Commission have introduced. But you need to make sure that you have appropriate budget provision in your letter of offer to enable you to do that. Fines, financial penalties, and expenditure on legal disputes or litigation are also ineligible. The cost of gifts are ineligible. Now, this is a change from the previous programming period where there was a threshold that a small gifts were deemed to be eligible. This time round, the regulations have clearly stated that no gifts are eligible. Costs related to fluctuation of foreign exchange rates are also ineligible. Engaging a project partner to deliver goods or service are also ineligible. So you need to make sure then that if you're engaging an external service provider, they have to be external to your project. You cannot contract with yourself or with one of your partners. Also in relation to then activities completed and payments made after the project end date, which is outside your eligibility period, are also considered ineligible. We're going to have a separate webinar at the end of June focusing on procurement, but I thought it would be worthwhile highlighting the procurement thresholds as part of today's session. So these are also included then in Annex 2 of the programme manual. So the lowest procurement threshold we have is any items of expenditure between 200 and 5,000, either sterling or euro. A price check is required from at least 2 competent suppliers. And what we mean by a competent supplier is somebody who ordinarily provides the required goods or services, and you need to keep evidence of that price check. The next threshold then is between 5,000 and 50,000 euros or sterling. We should just highlight then that this upper threshold has increased. It increased from April this year. It previously was only up to 30,000, but has now been increased up to 50,000. So if you have expenditure that is intended to be delivered and the anticipated cost is between 5 and 50,000, either sterling or euro, you need to have evidence of seeking at least a minimum of 3 written quotes from competent suppliers. For expenditure then between 50,000 either sterling or euro and the EU threshold, you then full tender action is required. So with full tender action, advertisements, you need to make sure that you either are using procurement websites or regional press. Projects are also expected to advertise on a cross-border basis unless they can demonstrate with evidence that they are a single jurisdiction project. Next thing then is the EU thresholds. So the EU thresholds are expressed in euro only. So if you are a project a project partner who is based in the UK or Northern Ireland, you will be initially incurring your costs in sterling. So you need to then convert your anticipated sterling value to euro using the commission exchange rate for the month the contract is published. So the EU thresholds are divided between supplies and services and then works. And also then they're also subdivided then on the type of organisation you are. You need to make sure then you pick the appropriate category. So that is, there's some entities listed in Schedule 1 of the regulation. There's public sector outside the civil service, and that's the local authorities, and also the utility sector. So you can see for the entities in Schedule 1, the threshold is 143,000 euros. But if you're the public sector, for example, local authorities, the threshold is 221,000 euros for supplies and services. In relation to works, there is no division based on the sector that you're from. The supplies and services threshold is 5.538 million, and that is excluding VAT. We also need to note that for the EU threshold, full tender action, you need to go and you need to ensure that you advertise the contract notice on the official journal of the European Union or the OG. We need to highlight as well that advertising a contract on find a tender service is not a substitute to advertising in the OG, and the Commission already have made a ruling on that. So it is one thing that we have to stress, that all contracts need to be, for above the threshold, need to be advertised on the official journal. We're going to take a look now at project reporting. So project reporting takes place within GEMS, the same way that you had applied for through your application on GEMS. Your project now moves through a different module now to the reporting module. The project reporting is an essential part of the management of your project. Both the lead partner and project partner, if you have any, have responsibilities to report for your project. There are 2 aspects to reporting. The first thing is to facilitate the communication and monitoring of project progress and the checking for compliance with the approved project. And the second area then is to seek reimbursement for the eligible expenditure incurred. Partner reporting then, so the lead partner and all project partners within the project must submit a partner report for each reporting period. And the reporting periods are specified in your letter of offer, and the reporting periods are normally 3 months. So partners must build their respective partner reports throughout the reporting period. This will ensure timely submission of the partner report on GEMS following the period end date. Partner report has 2 sections. The first section then is the activity section, and the partner report. And this is where the project is a project management tool for your lead partner, and it helps them to monitor the progress of their partner, and it's imperative that this is completed. The expenditure section of the partner report will contain all the lines of expenditure are recorded for each cost category, and the supporting documentation or audit trails for each item are also uploaded. There's a practical guide on the submission of partner reports has been prepared to assist submitting partner reports on GEMS, and this is available via the support portal. This guide highlights the responsibility of the project partner and lead partner to redact personal data when entering data or information on GEMS and when uploading supporting documentation. The key points are: photos of people must not be submitted and uploaded to GEMS. Personal data, except that required for the verification of expenditure, must not be submitted or uploaded to GEMS via the project or partner report. Datasets submitted must not contain names, addresses, postcodes, contact details, dates of birth, or any sensitive personal data related to a participant. Any data collected from or about children must be handled with the highest level of care and security. Partners must record or upload attachments to show anonymised or aggregated personal data relating to participants. And that's very important, that we do need to upload data in relation to your project, but you have to be mindful of the GDPR requirements and make sure then that you respect those. Additional safeguards in GEMS are in place. So before creating a partner report, carefully check the settings for access to GDPR sensitive data in the project privilege section. If you're submitting personal data within a line of expenditure, please ensure the sensitive data flag has been ticked. This enables visibility of the person-related data according to GDPR. Users with an active flag can mark and view sensitive data in the list of expenditure and procurement sections of the partner report. For partner reports, please also ensure where GDPR sensitive data relates to procurement, and it must be where you have to provide it, it must be uploaded in the GDPR attachments section within the procurement tabs. A user without privileges to view sensitive data cannot download a file in this section and can also not see the file name or description. And if you have any queries in relation to this area and you need to seek further guidance, those can be submitted. So you can submit a ticket via the support portal. I've also mentioned there that we have a number of user guides available on the support portal, which provide the specific guidance on how partners and project reports should be submitted on GEMS. I've already mentioned the practical guide on submission of partner reports, but there also is a very useful video guide that shows the screens on GEMS and walks through then how to submit your partner report. Once each partner report has been submitted, their partner report on GEMS, the project's appointed controller will undertake the management verification on the submitted partner reports. The controller will apply the PEACEPLUS risk-based sampling methodology to each partner report and examine the lines of expenditure selected for verification. And when they have conducted their checks and rejected any ineligible expenditure, the partner report will be certified. When the partner report for the lead partner and each of the project partners have been certified, the lead partner is then able to prepare and submit the joint finance report. And then there is also a practical guide which is available on GEMS on the submission of these project reports. So project reporting in this section now again talks about now the joint finance report. So the partner reports, first of all, just recap, the partner reports are certified by your controller. All certified partner reports are included within the joint finance report, and the lead partner creates the joint finance report on GEMS for each reporting period. There is a 12 weeks available from the end of the reporting period until the submission of the joint finance report. And we'll look in more detail in the next slide about what's included within that 12-week period. But the joint finance report is submitted to JS, who undertake their checks. And when they are content, the joint finance report then is passed to the managing authority. The managing authority then, they carry out a number of different checks. And when they are content, the joint finance report is passed to the accounting function for payment. So we've covered there the steps that once you have a draft report, then it's submitted, and then that's the lead partner submits it through, and once they've all been certified, then it goes to the JS, who will do their checks through then to the MA, and then the MA then will pass it on to the accounting function for payment. So the 12 weeks timeline. Partners have 12 weeks from the end of the reporting date to submit their partner reports, and for the controller to complete the management verification, and for the lead partner to submit the joint finance report. So again, just to recap, that's the 12 weeks to submit the report, controller to undertake the management verifications, and for the joint finance report to be submitted. So we take an example of a reporting period is January to March 25. So in this example, the project partner submits the report as soon as Expenditure has defrayed the bank. The controller applies the risk-based sampling methodology and carries out the management verifications on the expenditure selected for full verification and raises any points of clarification. The controller then concludes the control work and certifies the partner report. The lead partner submits the joint finance report to JS, and all of the above must then, in this example, must be completed by the 20th of June, because that's 12 weeks from the 31st of March. By the project and controller working together, time efficiency can be achieved. So that's why we have to stress the quicker that the project partner submits their partner report, it means it gives more time then for the controller to undertake the management verifications. And the quicker that process undertakes, it means the quicker that you'll be able to receive payment for the expenditure, the eligible expenditure that you've incurred. So the joint content report then is the other piece of reporting. So this must be submitted every 4 weeks from the reporting period end. So if your reporting period was January to March, you then have basically until the end of April to submit your joint content report. This report contains information on the overall project progress at work package and activity level, and it includes information on achievements, indicators of your progress, communication, involvement of the target groups, project management, as well as problems and deviations. Information provided by the partners in the partner report may be collected and summarised by the lead partner for included in the joint content report. Output and results should only be reported when they are fully completed. Therefore, part completion of outputs and results should not be reported. So reporting of project expenditure. So information is keyed into GEMS, must be complete and accurate, only because it is our only source of management information for the PEACEPLUS programme. Audit trails must be complete and uploaded in an organised manner. So we've already went through the different cost categories there and highlighted what the audit trails should look like. So you need to ensure that when you are asked to provide, when you're uploading the documentation for a line of expenditure, a fully complete audit trail must be uploaded. And when you're uploading this information, you should use appropriately named file names to enable documents to be easily identified. Evidence to support progress against targets must be uploaded in an organised and complete manner. And SEB will use this management information to report to stakeholders, including the European Commission. Management control system in the PEACEPLUS programme includes the following. So all projects will be subject to a management verification by an appointed controller. Verification of outputs will also be undertaken by JS, and supervisory checks by the managing authority. Additional checks or audits that your project may be selected for can include on-the-spot checks. Also, the PEACEPLUS Audit Authority will be undertaking on a sample basis projects, and this comes part of the annual common sample that the Commission select. So in each Each year, the programme will have a number of projects that will be selected as part of the common sample, and any project could be selected for that. And also then, if the European Court of Auditors could also come at any point to do an audit on any of the expenditures being submitted in claims. In fact, we're talking about project reports. We're also going to look at retention of documents. So each partner is required to retain documentation related to the project implementation, including evidence of expenditure for a minimum of 5 years from the 31st of December of the year in which the last payment is made to the lead partner. So, for example, if the final payment is issued to the lead partner in April 2029, the retention period would run until the 31st of December 2034. There may be situations when longer retention periods may apply, and in these cases could be state aid or legal challenges, or in accordance with the national rules. And the lead partners will be notified if a retention period extension is applicable to your project. Okay, so that's finished the main part of the presentation. So we move on now to the questions and answer session.
Thank you so much for that, Emma. So we do have a few questions here for you. Just before we go to the questions, just to let everybody know that the slides will be circulated after the presentation. And as I said, the recording of the session will also be available on our support portal. I'll also be sending you out a feedback form, which will be anonymous. And if you could take the time to fill that out, that would be really, really helpful. We use it to improve our sessions going forward. So if you can reply to that, that would be great. Okay, so Emma, some questions that have come through. I'm just going to go down just to the bottom here. Excuse me. Are task assignment letters still required if the percentage of time is stated in the employment contract?
Our preference is that yes, task assignment letters are provided, because the task assignment letter also includes the description of the duties. And in some cases, a member staff might have been employed in the organisation for quite a while, and then there wouldn't be then the description of duties might relate to an older position. And also the task assignment letter includes the salary that the member of staff is on. So yes, the preference is that task assignment letters are included.
Right, thank you. If a team meeting is organised, is payment for this made from travel and accommodation?
In relation to if it only relates, because I know under the previous period that well, is it? We need more information. What is it for the team meeting? Is it the travel for the team meeting, or is it the room hire for the team meeting? But the thing is, team meetings really shouldn't be, they really, if you're only having project staff, those costs, that is part of your just normal administration. So I would say those costs should be covered just as administrative costs. So therefore, it's only meetings like that you should only be claiming room hire and like hospitality costs when there is external to your project being involved.
Okay. Great. If the person who sent that question in wants a little bit more clarity, just send another question in, just outlining exactly what it was that you wanted to know. Are staff T&S costs not audited the same as office and admin costs?
No, that's right. Anything under a flat rate will not be inspected, but they need to ensure that costs that are being covered by the travel and accommodation flat rate are also not reported under a separate cost category, because that will be double funding.
Right. Can you provide clarification on types of evidence acceptable for proof of work delivered in brackets EES, e.g. for something like room hire?
Well, room hire, you would have probably an agenda, and you'd have notice them. You'd have something, whatever the room hire is for. You'd have evidence of what you used that room for. So if the room was, for example, to hold a training event, you would have the evidence of the training.
Right. Our equipment budget includes an amount for office setup. We have opened 2 new offices in 2 separate premises from our main organisation base exclusively for this project. Are furniture costs, such as desks, office chairs, eligible under the equipment budget?
Yes, they're included under the equipment. If it's included in the fact sheet, and we'll give you further information on that.
Great, thank you. Does proof of equipment, photos, or are other types of evidence acceptable, e.g. delivery notes or listings of serial numbers for IT equipment?
The photographs of the equipment rather than photographs in general. Sorry, say it again, Marianne.
Does proof of equipment, and the person's put equals photos, or are other types of evidence acceptable, e.g. delivery notes or listing of serial numbers for IT equipment?
We would probably, a delivery note really should be provided. For us, we can't specify exactly what every audit trail is. It's the audit trail will be dependent on what you have. But yes, if you are receiving an item of equipment, you should have a delivery note to show that you've got it. If for any piece of equipment that is greater than £1,000 or €1,000, that's regarded as an asset, and therefore it should be recorded in the asset register. So the asset register should be provided as well.
Great. Thank you. Can purchase of mobile handsets for project staff be claimed under equipment, with monthly charges being eligible under the overheads flat rate?
If the mobile phone is being used for administrative purposes, no. Because, and that was one of the things we maybe has been clarified in this programming period. The only instance where a mobile phone that is eligible is if the mobile phone is being used as, we had an example previously where it was a scientific project and they had a mobile phone used as a data exchange, and it was capturing data from buoys that were in the Irish Sea, and the mobile phone was used to collect the data. If the mobile phone is being used for those purposes, they are eligible. But if the mobile phone has been used for communication purposes, communication is covered by the office and admin flat rate.
Lovely. Can you confirm in what case a single action tender is permitted under PEACEPLUS? Also, what level of justification or documentation is needed for audit purposes? Just want to make sure we're fully compliant before proceeding.
Right, well, that will be covered actually in the procurement webinar that we're doing on the 30th of June. And I don't have the extract of the programme manual in front of me here because it's not the subject matter of today's presentation. But you need to ensure that you have, if you still have to go to market, there is no ability to look for single tender actions in this programme. You need to evidence that you have that the providers that you go to, there is nobody else can provide those services. But as I say, that isn't the subject of today's presentation. That will be dealt with on the webinar on the 30th of June.
And if anybody hasn't received an invitation yet for the procurement webinar on the 30th of June, please do email me and let me know, and I can include you on that. The one on the 30th of June is general procurement, and there is another one on the 3rd of July, which is specifically for projects that have capital procurement in them. So if you need an invite to either of those, then please do email me and let me know. Okay, we'll keep on rolling here, Emma. What payroll costs are eligible and make up the amount claimable? A breakdown of the eligible costs is required.
The costs that relate to the employment of the individual. So that would be either it's the total employee and employer costs that are detailed in the employee's contract of employment.
Okay, great. Is advertising in e-tender NI sufficient for works up to the EU threshold?
If it's a cross-border project, they also need to advertise in e-tenders Ireland as well. So, but yes, up to the EU threshold, that is the, again, we'll cover this on the webinar on the 30th of June. But yes, anything is full tender action, you have to either use the public procurement website, which is either e-tenders IE, e-tenders Ireland, or e-sourcing NI as well can also be used. So you need to make sure you're doing it on a cross-border basis. And if you don't have access to any of those procurement portals, you should be using the national press.
Is there a naming convention guidance for documents we upload, or is that left to the partners' sensibilities?
It's left to the partner sensibilities. I think that just to make sure that if they name documents, rather than, I know in the past we might have seen documents that go through scanners and they're all called document 1, 2, 3, 4, 5, that doesn't help. So if they can make sure they use meaningful names and that it makes it clear what the document the relevant document relates to, so at least it's easy to identify, because the documents probably will be contained either in zip folders or in large containers, and we want to make sure that it is easy for both the projects and also the controllers to speed up their process, so they can easily identify the pieces of information that they're looking for.
Do costs from the controller need to be added to each claim period?
They are, yes. As long as they are claimed the same way that they claim incur any other item of expenditure. So those costs will be reported under your external expertise and services budget.
Okay. For a partner who crosses 2 jurisdictions, NI company, but if you have a sister company in the other jurisdiction, ROI, are the staff working in ROI able to be employed by the ROI company and recharged to the NI company, or must staff both sides of the border be employed by the NI company?
I think I've already maybe a project has asked a similar question of us before, and it came through the support portal. There needs to be a link between the two companies to show that those staff are, and maybe if that's a sort of a very unique case. If that maybe that project maybe wants to send me a separate query, I'll pull out the guidance that I've already issued on that, because I think it probably maybe wouldn't affect too many projects. But
Okay.
but we already have answered a question on that, and it was in the support portal.
Okay, fantastic. And I think this might be the last question. Is there an appeals process in place if we disagree with the controller's decision?
No, well, the thing is, if they disagree with the controller's decision, they would need to be saying, based on the information in the program manual, what state their case. The controller will be verifying their expenditure in relation to the program manual, so in relation to the fact sheets. So there really shouldn't be a position where the members of the project is disputing the controller's decision. If they do, it's up to them to discuss it with the controller and maybe put their case forward, and maybe the controller might reflect on it, but at the same time the controller is bound by ensuring that they are verifying the expenditure in accordance with the eligibility guidance.
Okay, that's great. I know we've had some questions in about procurement, but as Emma said, they will be covered in the procurement webinar on the 30th of June, and that will be hosted by Emma as well. And we will also have Arvo, who are a specialist procurement company, presenting on that webinar as well. So there will be plenty of advice available on procurement from that session. And as I say, if you haven't received an invite to it, then just let me know and I can send that out. So that seems to be everything. So thank you very much, Emma. I'm sure everybody can understand now why you are the font of all knowledge at SEUPB, always the person that we go to if we have any questions. So thank you very much for that. Thank you very much to everybody who joined us today. I hope you found it useful. As I said, we will circulate the presentation slides, and we will also, the recording of this session will be available on the support portal, and I'll let you know as soon as it goes live. And I'll also be sending you a feedback form as well. But if you do have any other questions or anything that you need, please don't hesitate to get in touch. But thank you all so much for coming, and we look forward to seeing you soon.